Well, good afternoon, everyone. Scott Henderson, shooter. And we're going to go over some notes here for some setups, Elliott Wave, etc. Of course, at the end of our presentation, please do review our disclosures. Now, today I'm going to start with M2 money supply. We are at a historical high in May of 2026. Now, the way I see this is peaking drive 1. We're going to get peaking drive 2. Probably going to get a peaking drive 3 somewhere up here. So we have a lot of upside as far as monetary policy. Now, the next thing I want to bring in is China's money supply. Note, everybody, the majority of the cash on the planet, even though Europe matters and other parts of Asia matter, typically what China and the US does specifically manipulates the markets. Now, we have some recent export controls on assets out of China, which is one of the reasons I do believe that Bitcoin is waning, because nobody in China can buy it, or they're limiting it or something to prohibit a flight outside of China. But in short, I find that to be bullish equity. So, starting off with the dollar. Now, we are just batting our heads against this band right here. I mean, we've broken through it, and resistance is really a tad bit higher, about 102. This is printing a little shallow, because I see this as we got peaking drive 1, peaking drive 2, peaking drive 3, so we could get a reject, test the lows. Slope would be a little higher, maybe about 98. So, that kind of coincides maybe with a rally in the markets. So at this point, you probably understand my bias. You know, there's always a reason why I think the way that I do. On top of that, we've been rotating a little differently in flow. And with that, let me jump over to equities and just sort of tie that all together for a second. So right here on this particular wick, right, we started seeing aggressive buying in Microsoft right here on this wick here. Boom. Came in. I don't actually have a volume candle up here, but let me bring it in. Now, notice this sell candle followed by this buy candle. Notice how aggressive Microsoft has been to the upside anytime you get this kind of a buy. They're always breakout candle, quite consistently. You know, as I always say, every stock has its MO. And this was the main reason I jumped on board with Microsoft, plus the fact institutions were clearly buying it as far as the flow was concerned. All right, back to the S&P 500. I wanted to just identify that. So sometimes they're different tells. Now, what I don't like here, this could be an ABC. I mean, actually, we got quite, decent equality here, so we could be done, right? So that's our A, this is our B, and this is our C. Maybe. If not, it's going to extend or it becomes elongated. I still think the shelf holds here without a catalyst. Now, let's come in and sort of talk about the rout that's happened in South Korea. And also, I'm going to go back to China for a second and talk about how investors have basically been annihilated, all right? And what I mean by annihilated is they may have had, $1 million. Not everybody had $1 million in China or in South Korea, but it just is a round number. It's probably worth 300K right now. So imagine the poor bloke who had 10 grand in the Chinese stock market or the South Korean stock market. So the main person who's been popped has been the retail investors, right? So the question is, do we have continued contagion? Because the way I look at it this way, China was the first pull that started pulling. Obviously they put on their liquidity restraints. They started printing like a lunatic. Highest M2 money supply in history in the last 3 months. And now we have South Korea that really took a major hit. And the question is that going to roll in Japan? And, another caveat too is China, Xi Jinping, and I'm forgetting the president of Japan, have been in this argument, tit for tat kind of thing, where they're literally having a media fight, or it's a ploy. You never know in this world. But the fact is that I think the BOJ is very close to hiking rates here, right? Now, that could give us the catalyst to break here. Now, historically, typically we've had maybe a 3-point move off a Fed hike out of BOJ. We've only had one in history, or recent history, so it's a little difficult to measure. But if we just look at it right now, we're roughly at 745 on the S&P 500 as far as the SPY is concerned. So we assume we have roughly a 3% move. It brings us back to what I'm classifying as structural weakness below. I don't see this structure as failing until we get below 608. So we have a lot of room just to sort of grind out. I've been talking about this flat. I think I said it somewhere in really later part of May, maybe even early April. I might even started talking about it here, where we may just have this broadening pattern that kind of works its way out, and that's where we are. And so we can just build out this flat a majority of the year. I mean, just in between these ranges. We have the capabilities with AI, or at least I believe we do, to pin the markets simply by rotation. All right, so it's a good chance we're done. My bias would like to believe we're a little bit lower. Historically, 85% of the time, July is a bullish month after a neutral or negative June. So you do the math, make that decision yourself. Let me jump over to the NASDAQ. Now, what I'm trying to do is sort of map what the visuals are. Right now, I see this leading diagonal. It has not printed this low as far as I'm concerned, right? I think this shelf holds. Structurally, it looks good according to the way it looks. But here again, we've got that equality in our look, sort of like an ABC, right? But we really haven't printed the equality C like we have in the S&P 500. So I don't think the NASDAQ's done. However, when I go look at the Mag 7, I don't necessarily see that right now. Tesla's the only one that's really taken a beating right here. Meta closed the week roughly about 4.9%, on the downside after that huge rally, pumped up to, roughly 625, I believe it was. So, I think it's a mixed bag. I think it's that rotation where you are. Now we're starting to see some strength in SAS. Right? And we're starting to see some order flow go into utilities. So that's a mixed bag too. It's saying, hey, I'm going to some safety. So a little flight to safety. GLD is still holding up. Just a quick look at GLD as far as that. I mean, right at the shelf. Let me jump over to semis because this is where I think we're in trouble. This look that I have in the semis. I see this as peak and drive 1, peak and drive 2, peak and drive 3, which opens Pandora's box down to about 479. We've now gotten our second weekly close below there. The next shelf, which has to hold, really should hold this 576. However, this 565 breaks. Next support is down at 520, so it's $45 pop lower. Next support is going to be down around 460, right? Next support is down around 434. I don't know if we get to the bottom of the box. I don't. But what I'd like to point out is we've got support, 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 support. Okay, where's our support here? Maybe. No, didn't back test. We needed a test of this candle. 50% didn't get it. We didn't get a test here. So this is our first support really around 528. Well, we're at about 592. So with further ado, let me look at TLT. We got total rejection off of that price. Glad I didn't open. I really want to push lower. I want a lower wick. And reason why is this kind of a low. Notice how we have this divergence here, right? This was broken. We didn't take it out, right? It was rejected. So here was our first shot with divergence at a higher price. It was confirming, our confirmed low was here, lower low in price, lower low in RSI. This was our confirmed low. This was our diversion low. So we had clean divergence here. We have clean divergence on a higher low. Well, we put in a lower low here, but not as low as this. So that structure was broken. So, I find this over the history of looking at charts like I have. When trend support breaks, hello, we want to listen. So I think we do test the lower side of this box around $82. We get back down there with some divergence. That gives me some confluence and some support. However, technical dips back down to this line probably are going to be bottom. 2 cents. That's it. All right, let's look at Bitcoin. Now we're holding notice that we broke below the shelf. This is the most important shelf, right? The next ledge is this 63, which we're below now, right? So what do we have? From a breakout standpoint, our next ledge is 52,000, right? Even though so this is our support. Let me just draw a line there for you so you can have a good visual. So we tested it here, right? Comes down, I have confluence in the zones and fibs. It's in this fib box. In other words, that's measuring the rejection of this whole candle, right? So this broke, next box is open, third box is here. So you got a little bit of bounce off the second box. You got a bounce off the first box, but it failed, right? So likelihood is we get a decent flush, and the most likely place is right back down here to 38,000 down. That's just where most likely to put. However, this shelf could hold, right around 44,000. Equal number. Note that Bitcoin, when because realize these guys that are trading crypto, when they sell large blocks, they have a sell order in at 44,000 or 44,500 or 45,450. There's never pennies in. So when you have a zero print in dollars on Bitcoin, the whales are cleaning house. As soon as you see that on a close, you know they're selling. Now, they never put it all in one order. They always do split. So that's where you get the continuation to the downside. They sold, opened up again, they sold again, sold again. Now, these are weekly sells. It is consistent in Bitcoin. Once in a while, you get a shelf like this, but you almost always get that kind of aggressive follow through. Just sort of making you aware of that. Let me jump over to our names. Okay, now just quickly, this is my new automated chart. And what I mean by automated is I have HELOC OS monitoring it. In other words, it's reading my charts. We're scoring the charts with a methodology. We're still building that out. All right, so let me start with our names that are here. Added some positions, ASML. Mainly earnings is the 14th and the 17th. That's the main reason I jumped on board. At this point, prices just failed from where I went there. It didn't hold up. I was hoping this trend support would hold. Didn't do it. Not going anywhere though, because I think with earnings, we're looking at 2,050 to 2,200. The reason is I can't imagine how they don't beat with what's happened with ARM and everyone else and Nvidia on last earnings, all these growth numbers coming out. How in the heck is the company that's manufacturing all of the main computer circuitry not going to benefit as well? I just don't see it. So that's why. All right, TSM was sort of my secondary bet. Reason I think they're a major benefactor from what Elon does. So, we're right in the buy box. So we added that. OKTA, we added that. Now notice I printed an article on Glasswing this week about cybersecurity related to what happened in Washington and Anthropic. I suggest that you read it if you haven't. And I also noticed that Kurt added over at Fundamental Trends, added some, Seeking Alpha now, added some of the same names or similar names. Now, I don't know whether you read my article or not, but either case, it's always supportive when you have another person you respect in the investment world who's doing the same thing you are. So confluence works for me. Now, Okada, we got a little bit lower of a push, but I went on this breakout. I assumed we would get at least to the T2 at 161. I was good with that in this market. CrowdStrike has not slowed down since we entered either. Same scenario. I was looking at this breakout, looking at a T2 target of 218. RBKR, same scenario. Also on that Glasswing article. All right. I think we're going to break out and head to the highs. So I'm chasing that run is what I'm doing here. Now, TE is a little bit underwater, but still is holding this trend support here. I almost cut it going into the end of the week, but I decided not to. So yeah, I think we head back up towards the highs. I'm just sticking with it. Microsoft, again, like I said, we added that, just as, been going ever since we took that number, light candles, but it's going in the right direction. Now we had glue open. It worked. Probably should have closed this Friday, but I decided I'm going to see if it's a flag. I put my stop roughly at 50% of the candle. Body of the candle closed between 23.20. I'll close it. WMB, I should have closed it. However, we're in the buy box. I decided I wanted to keep that on simply because I do think we get the surge drive. Peaking drive 1, peaking drive 2, peaking drive 3 up here. I like the idea of that move. Stability, it's been coming right back. It's predictable. It's been predictable as far as the tape. So right now I'm hanging on. Might regret that one later. All right, now I got to come down to the hourly as far as SpaceX concerned. Our entry was good. It could have been better, like down here. However, that's what it is. That's where we are. We've now got our higher low, so we should come in and put our second peaking drive around 180, potentially get a third around 206. That's where we're at. Oracle, again, I'm just kind of building this off of the lows. It's got to give it back. Nice divergent at some point. It keeps bleeding. I haven't given up on it yet. 137, I really have to look at it again and decide if I'm going to change. But chances are what I'm going to do, I'm just going to sell some covered calls against the position and just to sort of insulate. Now, Hive, again, is my little piece in crypto. Right now, crypto looks horrible, so I'm actually glad I don't have a big piece anywhere. I'm just writing it out. I have January $7 calls. I have not added to them, but I should have at this point. But I just don't want to add to a position I'm underwater in. But that's the way it is. Zscaler is finally getting out. I was harping it all through this whole period, even here. I liked it here. I wanted to buy here, wanted to buy here, buy here. And then we entered, I think, right around here was the first piece. Then added another piece here, added another piece here. So, this, I think our numbers are going to push. We're going to head up till about 183 from where we are now. Just going to sort of ride the storm. All right, let's jump over to some of our names. Now, I want to talk about Meta. because I published an article on that as well. Help if I had the right chart up. We got that gap on all that news, and now we faded right back in. So I look at this as being a buy right here. It's challenging with how emotional these AI names are going to become because it's on the whim of the news. So if you're going to enter something like Meta or anything else during this period, you got to recognize it's going to be volatile. So judge your position size accordingly, right? And I didn't enter here, and man, when it gapped the next morning, that was the day after I published the article the previous evening. We had 1 day to get our entry, and bam, then the news came in by the opening of the next day. So 1 day after I did the article. That happens a lot, by the way. I write something on it, and it's like fast. The turnaround for these events are fairly quick. And this pop was on them monetizing compute internally after Anthropic cut them off or reduced how much compute they could get from Anthropic. So, again, we have this internal battle going on between these AIs, but I do think this recovers. I mean, nice rejection, clean, equal ABC. We had an elongated ABC or extended ABC here, so it's doing what it should do. If you look at where the RSI is, we had a flushing drive on this. That's the only thing I don't like here. A little bit lower than this low. So that's kind of low. So we could still put in one more lower low. However, in my mindset, I still see, regardless of how low it pushes, whether it's here and it's done or it's here and it's done, we're still going back up here to 700. So that's my thought looking at Galaxy. Now, the number here, I think it's heading lower. I think it's heading back towards these lows. Reason is look at RSI. It's confirming. MACD is just opening. It's at the 50% line. So, you look at the flushes down here. We've got about maybe a negative 185 to print before it's done. So, I wouldn't be adding here. If I was in it, I'd probably be trimming or I'd be selling covered calls if I held enough common shares to do so. That's my thought. Okay. Now, I don't even know that I like this with the way this, anytime you have this kind of noise, these kind of gap noise, we've tested that wick right here. We're testing this wick right here. Let me put a line there. We wick below it. Body didn't close below it. Once that body closes below it, this actually becomes a reversion to the mean candle. So this body, the next candle, body, closes below this, right? And let me give you a measurement why I think that. So let me get my fibs. So on this ledge, if we're measuring the full leg, we broke below the 78.6, opens up the 1618 off of this breakdown. Now let's just step that up and tighten that box up just a little bit. Let's use the next shelf to measure, right? This is how when I grind down and I'm looking, I want to see where my fibs are, my extensions are. So we've closed below the 618. We've closed with the body of the candle on the daily. Let me go to the weekly. That's what we want to confirm off of. Weekly, body of the candles closed below. So that opens up the 1618 back at 262. That's the way I look at it. That's my golden box thesis. So, and it closes below the 178.6. It opens up the 2618. That's ultimately where the numbers come in. So the most likely shelf that's going to hold if that breaks is 258. So I don't know that I'd be entering this one right. BE, getting a little resistance. I don't like these wicks up here. Almost all our wicks. That red cell candle off of that high really comes off more as a stop run. Somebody's clearing out. I would think this ends up being an ABC. Maybe we get something like this here. And I'm going to beat it up for a second. Then I'm going to come back and say, we're going to have a lot of noise in this market relating to what's going on. So that potentially 222.80, I like it. I think it still gets back up here to this 431. So all depends on how you want to hold the heat up here. I would be trimming, or I would at least be selling covered calls if I own BE. Adobe, it actually looks pretty good down here. However, it's got to get above this resistance. And let me come out to the monthly because I wanted to, this is my thought pattern or my study of corrective legs is there are patterns. All right. So you get this corrective leg. It's either an ABC and it ends. So A equals C, right? Or it becomes an impulse wave. Now, at that point, almost all corrective impulses are either leading or ending diagonals. So the first flush is typically a leading diagonal. But we got that. That's your first tell. So you're going to have this shallow flush. Now, what happens is you end up with these flushing drive. So it creates this little S-curve thing that I look here. Then we flip. Now we're getting into the last stage of the corrective leg. Again, that becomes an ABC structure or an impulse. right? And quite often they're ending diagonals, the opposite spectrum of what we have up here. And then we end up where your conviction is you end up with the peaking drive versus not getting a flushing drive where you have this huge flush, right? Now you could classify this as a flush here, but so I see this as peaking drive 1, peaking drive 2. Now the question is, do we get a peaking drive 3? That's my question. So if we extend lower, and I'm looking at that as equality, again, everything I do, I like symmetry in the wave patterns in the count and structure based on the prior waves of that stock, that chart, how buyers and sellers have responded to price. Just like my Tesla analogy, and I've said it 1,000 times now, we can manufacture so many Tesla cars every single day, period, right? So same case when it comes down to Adobe. There's so many people who buy the stock. That's it. And there's so many of those people who own the stock that are emotional that will sell under certain events. We've got those numbers. We can look at the history. It's a reflection of price that we see in these candles. So my bias would say that we test 142. So that said, I don't disagree with scaling here, 216, maybe a piece on here, maybe another little piece on here, another little piece. Then you wait for your break back out above. You don't get your full position size on. Like, for example, if you're here and it never gives you another lower low, right? You're at a full position size when the body of this next candle at 271 takes it out, period. So I don't have a problem with scaling with a name here where Adobe is as far as the longer term look. But I just wanted to go through that. All right, let's look at Poté Technologies. And man, did that just, what a beautiful candle. Jeez, look at those wicks. You know, you got to tell. I mean, it was just telling you. It was like alarms, alarms, alarm. Look at these wicks. It's telling you. The sellers are taking profits. You get this huge pump, what do? They gave you a wick. Well, Jesus, at least 50% of that candle, I'd be taking half off at least. I get one more candle and it gets up here. I'm like, boom, I'm taking most of my position because I understand where my eyes are if I was there. Unfortunately, I wasn't in it that long. I got stopped out somewhere over here. I don't remember exactly. That's where we're at. I think it heads potentially tests this demand shelf down a little bit lower. So maybe something like this. Gets back down here. I get interested. Lower side of this box looks good. That's an automated box, by the way. We are measuring trough, peak, trough. So these fib boxes now, the buy boxes, are relative to my Mound thesis as far as where the most likely place is for us to go. And then we're also pricing in weekly higher lows and monthly higher lows because that really is where your structure breaks. So like we get below 833, I would be trimming, period, because we know the structure is weak, all right? We don't want to buy weakness. We don't want to hold weak. It gets down to 583, I'd be out, period. Monthly breaks, it's done. Most likely cases, we're going to test the lows where we have structure failure down to the low. So just giving you a little instruction. We'll go through that a little bit more. I'm getting the final pieces together on Chartbook, but we're really close just letting it run. I don't know how many more days or how many more weeks I'm going to spend fine-tuning it. And to be honest with you, I'm probably going to continually do that until I get what I really want, which is perfection. I like extraordinary, so that's where we're going. IIPR, I actually kind of like it, right? Inside this golden box here, the auto box is a little higher. My second box was down here. It's trying to come out. I would just run like a stop if you wanted to put something on here, maybe off of this shelf here. So it breaks below this 49.35, I'd be out. It's pretty deep. You could move it up to your next candle, but this shelf we don't want to break. That's where a lot of weakness comes in if that's the case. And if that breaks, it opens up Pandora's box down to, dollars. I don't think this stock does that because it has too much in assets. And realize when you measure extensions of a wave, it doesn't care what the value of the company is or how many assets they own. It's how buyers and sellers, how the FOMO appears in stock in prices and how the fear of loss appears there. So they don't really care how valuable a company is. When everybody's freaking out and they are afraid of losing their money, they frickin' sell. That's it. So it's an emotional event, not necessarily a logical CPA kind of event. All right, let's look at Credo. We'll come back down to the weekly for this one. I actually like an ad pretty close here. I like this shelf a little bit better, but I think this wick holds. That wick holds, then it's gonna be pretty solid. So we don't really have an ABC, so we get an ABC structure on this corrective leg, and it's building a trend here. What tells me we can get a pullback? Peaking drive 1, peaking drive 2, peaking drive 3 is what I see. So the way I see this is potentially A. Maybe we got our B. right? Then maybe we get C. So this holds anywhere above this candle or to even to this body right here. So this, boom, this 191.68 holds strength, relative strength in my book. So that's how I would look at that. I like the idea of adding, I have two different boxes here. I like it here just because of how the structure is, but the structure is much stronger if we hold above that level, above that shelf. All right. Just want to make sure I clarify the difference. All right, let's look at AVGO. Actually, this is on my list. When I added the cybersecurity, I was looking at this red candle. I was like, no, look done to me. All right. So what I did is I threw up an ABC structure and I said, nope, not me. I know Elliott Wave too well. So I like it here. So now it holds this floor here. That's a good spot. It's testing this candle right here, this initial breakout where we got some rejection right there. We haven't closed below it. No body of candle went right there. Hold it. Holy. Doesn't mean it doesn't break through tomorrow. The other thing too is this doesn't look done in RSI to me. Looks like maybe we've got a flushing drive 1, flushing drive 2, flushing drive 3, or a divergent flushing drive 3. MACD is wide open. So I think we got one more decent weekly candle to the downside at least. That's pretty much the way it is. So that's what I have for today, folks. Great trading. Until next time.